trading gold is not really as hard as they make it seem. You see a lot of YouTubers or a lot of traders telling you, avoid trading gold. If you are new into trading, do not trade gold. Well, it's not really the case. The issue is you just haven't found the right strategy to use to trade gold or any pair in general. Okay, so far you have a profitable strategy that works and you have the right psychology to ensure you execute your trade according to your system, then there is no pair, absolutely no pair that you should be scared about. So with that being said, let's dive right into this trade breakdown. So this was a trade I took on April 15th. It was a 1:3.51R, and I'm going to be breaking down to you guys how I took this trade, why I took this trade on gold. Right, this is on gold, and my entry criteria, my stop loss criteria, and my take profits criteria. So let's get into it. Now, the first thing you want to do when trading is you want to zoom out. Okay, you zoom out to see the bigger picture and the most recent one actually. So if you can look at this here on my chart, I'm not going to clear all this because that would be a waste of time for me to start drawing all those things. To make this video very long, like I have already long videos explaining all those ones about strategies. So now you can see at this point here there was a drop in price. Okay, a drop in price that gave us a change of character to the downward side on the 15 minutes time frame, which means price was bearish at this very point. And I used to tell you guys about other blocks, point of interest. So what I did was I marked this. Now let me zoom in like this. Yes, so I marked this sell order block. And how do you mark it? It has to be your last sell candlestick, your last buy candlestick before the aggressive sell. And you can see 1, 2, 3, the last three or the next three candlesticks were really aggressive to the downward side. When I saw this, I marked this as my sell, my sell order block. Also look to the left, you see this is a buy order block here, or a demand area, and you can see this was the last sell candlestick before the aggressive buy upward that broke structure here. So we have this buy order block or this demand area here, and there was a fair value gap. The indicators I use marked it. Even without the indicators, you can clearly see it. This was the jump in price. So there was a fair value gap at the beginning of that move, and that move as well took out the previous high here, which resulted into a break of structure. So that's a very valid, very valid buy order block or a demand area. And then price kept rallying up until it got to this point, and we could see that there was a sharp drop to the downward side. Probably it hit a kind of higher time frame supply zone or something. We won't be going into that, but just on the same 15 minutes time frame, you could see that there was a sharp drop at this point. It's the first candlestick to the downward side, second candlestick, third candlestick to the downward side. And me seeing that, okay, I already have this place as my point of interest because I'm waiting for price to come back down there so I can take a long, which is a buy. And also seeing this also makes me want to take a short from here. So I marked my last buy candlestick before the aggressive sell, which turns out to be the sell order block, as you can see it here untouched. Now price retraced back. You don't have to sit down in front of your chart all day. Just set your alerts, walk away, and let the markets play out. When it's time for you to take your trade, TradingView will let you know by sending you an alert. Until price reached this point. Now when price reached this point, I got alerted and I saw. So now this is the very important part with trading supply and demand. I had to wait because you can see this candlestick was very bullish. Okay, this is what I tell people for those that normally set their limits order down and just want to take that reversal, something like this. They expect price to go like this, and then boom, down. Yeah, that's true, but you need to always wait for confirmations. You don't just expect price to go like this. Sometimes it can break through your point of interest. The market will always do what it wants to do, so wait for confirmations before taking your trades. So as you can see here, the first candlestick that entered my point of interest was a strong aggressive buy candlestick. I had to wait. Okay, I had to wait. Then the next candlestick was a bearish candlestick. Other one again, bearish. I'm like, okay, it's like price is really respecting this, point of interest. That's where we now go into the lower time frame to find an entry opportunity. At the same time, I added a new confluence to my trading view account, which is my chart. I added volume, so I was using volume also to monitor the pressure between the buyers and the sellers in the market at that very moment. So I'm able to trade in line with institutions, where the big money at, where the big money is. Those who are moving the market, you want to be trading in line with them and not against them, which means you want to be taking a short only when the sell volume is high and a long only when the buy volume is high. But I'll explain that in another video where you can manage your trades and understand how to take trades using volume as your confluence. So if you want that, make sure you hit that subscribe button, hit the like button, so you get notified when I drop that as a next video. So moving on, we come to the 1 minute time frame here. I already brought it here so we don't waste any much of our time. Now you can see this was the aggressive buy candlestick into that point of interest. We had a rejection, we had this, and then we had the last buy up, which took out liquidity, forming a fractal high here, and then came down. When it came down, you can see we now had a change of character. I said this before, a change of character is just like a signal that the market is about to take a turn. But you don't just take any change of character you see on the chart. You need to make sure that your change of character is in line with a higher time frame, supply or demand region. As you can see, this is a 15 minutes time frame, and this was a sell order block or a supply region, and now we are having a change of character inside and in line with that particular supply region, so which makes that change of character valid. You understand? As you can see here, see this change of character to the upward side. Did the market go up after that? No. So which means if you wanted to take every single change of character you see, and then you saw this change of character and you went long, you will have taken a L on this trade, or you'll have hit your stop loss. So how do you enter now that we've seen our change of character in this particular thing? You set your stop loss at this very high because you don't expect price to come back to this point anymore, as it has taken out liquidity. You can see the rejection here, see it on the higher time frame here. So you want to set your stop loss at this region. Now where do you set your entry? Since this is the 1 minute time frame, this is like the lowest time frame you can possibly get to have that nice entry. You have two options. You can enter at the last buy candlestick here before the aggressive downward push. Let me zoom this again. You can enter at this last buy candlestick before this push downward, or you can just enter at the change of character line. Since it's the 1 minute time frame, you can just enter at the change of character line, because also it depends on the broker you are using. If you are using some kind of broker, they won't trigger your trade if it's too sniper, probably spreads or something. So you want to give that room for breathing space. You make sure that your entry is at the last at this change of character line. As you can see untouched here, see it's at the change of character line. Stop loss at this fractal high. And then where do you set your take profit? There are two systems. You can use a fixed take profit, or you can set your take profit at a key level. Now in this particular trade, I didn't use a fixed take profit. I set my take profit at a key level. So now that we've had our entry on the 1 minute time frame, we can now leave the 1 minute time frame and come back to the 15 minutes time frame, where our actual plots and analysis is. We just needed the 1 minute time frame for a precise entry. So you can see at the 15 minutes time frame, look at this. I know price wants to go back to my buy order block, right? That's correct. As you can see it here, which is my buy order block. But look to the left, this is a fair value gap, and you always know when there is a fair value gap, price will want to respect that fair value gap first before breaking through. Yes, I know price is going to break through that fair value gap, of course, but you don't just want to, it could reject sometimes, you never can tell. So I set my take profit at the top of this fair value gap. You can see it here. So my take profit was at the top of this fair value gap, hence it gave me a 1 to 3.5 risk to reward ratio. And as you can see, we tapped in. So see it on the 1 minute time frame. Price came back, tapped me in, came back to my entry a couple of times, came back to my entry and never went back again. Started the whole downward move, downward move, downward move, downward move, until we hit our full take profit at this point. And you can see, if I didn't come out at the fair value gap, see, once it touched this fair value gap, you see what price did? It rejected immediately. Look at this. So immediately it hit my take profit, price rejected, just like I anticipated, knowing very well that price is going to reject from that, fair value gap. But eventually still came down. But I am just not that kind of trader who likes, going up a kind of significant amount in profits, going up in 3 hour, and then price is then taking me back to 1 hour before going to my full TP. No, please, I don't like too much pullbacks on my trade, because the problem with most traders is they fail to appreciate money. Okay, I'm making money by clicking a couple of buttons. I understand, yes, it took you time and experience, but at the same time you need to remember that the amount of money you're making from this, some people actually have to work hard to make it. So it's not just because it's numbers on the screen or it's candlesticks, you just allow the market to collect back so much money from you just because you needed to be right. You needed to be right on this particular trade. Oh, trade had to go, and then it hit that other block, and that was where my TP is. No, just do something significant for yourself, make good money, and you come back to trade another day. So that being said, that was the beautiful trade I took. Clean 1 to 3.5 risk to reward ratio, and you can see when price went back to this buy order block here, it rejected up again, which means I was looking forward to taking a long. Actually, I was looking forward to taking a long. I got alerted, but unfortunately for me, I couldn't take the long because on the 1 minute time frame, price didn't really give me that. Price didn't come back to my change of character line. It didn't come back to my change of character line, hence I couldn't take the trade. Let me just show you guys real quick so you understand what I'm saying. This was the buy order block here. So as you can see, this was the buy order block here. Price tapped into this buy order block and then formed a change of character to the downward side, but I wasn't quick enough. You can see this is just 1 2 3 minutes, just 3 minutes. So I wasn't quick enough to check it, and then I could have entered around something like this. So this is a long position like this. It's a long position like this. So I could have entered at this change of character line or the last sell candlestick before the buy, because this pips looks too much. So you can enter like this. This was the new area of demand formed here, the last sell before the buy, and then you can take it back up to this sell order block here, giving you a kind of 5.5 risk to reward ratio. But you can see price didn't come back. Price didn't come back to tap it in. So that's a mistrade. You can never be always right on your trade, right? Just you have to make peace with it. So it didn't tap me in and price went. So I didn't chase price or something. I just let it go. I was happy with my 3.5 hour for the day, and that was it, guys. That's a very nice trade. This is the quick breakdown of this trade. So all you need is just supply and demand. Any pair you want to trade, you don't really need to be scared or say this pair is so volatile, this and that. Just have your strategy right, have your psychology right, and you will be good as a trader. If you found any value in this video, make sure you hit that like button, hit the subscribe button. It really gives me that boost and know that, okay, you guys are really enjoying this content I'm pushing out, and I keep pushing out content like this to help you become a profitable trader for free, absolutely free. And I'll see you guys in the next video. Peace out.